Now, in case you're not up to speed on what the coronavirus is, this new coronavirus is coming out of Wuhan, which is being termed as the Wuhan coronavirus, which is one of the other strands of coronaviruses. So this strand has been causing respiratory illnesses that lead to pneumonia, and it's been spreading throughout China's region. Now, Wuhan is one of the most populous cities in China with over 11 million people, so China is taking this very, very seriously, and for right now, Wuhan is on lockdown, and they are building a new facility for a hospital that will house new patients, and they're expecting to finish this building in the next 5 days. With all this stuff going on in the market today, the S&P 500 is down over 1%, and so the question is, should you be buying or should you be selling? So let's get into some of that stuff on the list today of what you should be doing. The first thing you absolutely should be doing is continuing to invest. If you get scared off, you're going to miss some great opportunities. Basically, think about your stock portfolio as it is in clearance mode. Basically meaning that anything in your portfolio that continues to meet your criteria is now on sale, and you should definitely buy more of it. Think about this example for a second. If you know you're going to be buying toilet paper every single month, and you buy that same roll of toilet paper for $1 every single month, well, if it now said that today toilet paper was now going to be 10 cents on the dollar, wouldn't you pick up at least 10 of those things, because you already spend $1 a month anyway buying said toilet paper? You want to be buying as much as possible in things that meet your criteria in your portfolio. Don't worry about the market value and the fluctuations day to day. Make sure that the stuff you're buying meets your criteria, and make sure that all the numbers align up for you and you're not emotionally investing your money or taking your money out in the first place. Remember, you're looking to accumulate assets. You're looking to get more position. You're not trying to look at the cash value of the asset day to day. You should be looking to get into something that you're already planning on buying, or something that you're already well invested in, and getting it at a much cheaper price than you were going to get, say, sometime at the beginning of this week. By buying more, you're helping your compound growth over time in your portfolio. You're buying things cheaper, which means you're able to buy more shares or positions, and for that reason, you're able to compound more growth when the market goes back up. Remember to stick to your guns, and remember why you invested in your positions in the first place. If they meet your criteria and all the numbers still match, and you've read the balance sheets and everything makes sense to you, then there's absolutely no reason that if something goes on clearance that you should not buy more, knowing that you would buy more anyway. And if you're having second thoughts about something in your portfolio that you thought once met your criteria, but now you're second guessing it based on the prices that you've been seeing throughout the week or the last month, then maybe you should reconsider what is exactly part of your criteria, and further enhancing what things need to be met and what expectations that you set for yourself over time. Now, another thing that you can recall about why you should invest is, remember the SARS outbreak back in the day. The market has since recovered then. So if you're waiting on the sidelines to invest your money, well, guess what? You kind of missed out. So you're not getting the great gains that you would have got as if you were investing during that outbreak in the first place. And this one should be treated no different. Now, if you are concerned about the numbers in your portfolio going down and you seem to be taking a much larger hit than you expected to take, make sure you are diversified in your funds that you invest in, and make sure you're not too over leveraged in one sector or another. Remember to have a healthy mix of index funds and different stocks or different things in your investment portfolio that give you more exposure to different sectors. Make sure, if you don't have any dividend dogs already in your portfolio, to go ahead, acquire, and add some in to your portfolio. If you're not sure about what the dividend dogs are, I put a link in the description down below on some more details in terms of how they were proven over time to continue paying out even though the market was in its downturn. Now, some things you absolutely should not be doing is sitting on the sidelines looking to get in at the very, very bottom. The thing is, you have no idea where the bottom is, so how exactly do you know when to get in if you never actually get in? Remember that the only opportunities you don't get are the opportunities that you never take in. So you're going to miss out on great gains when the market does go back up by you waiting, or you're concerned that the market is continuing to go down. Remember, other people are scared as well, and because of that, they are selling off things that they should be keeping. They will be back later to come and buy that stuff. Make sure absolutely you are not investing with your emotions. Just because you see the day-to-day price of what you put your money in going down does not mean that necessarily it is a bad choice, especially if it met your criteria when you looked at it previously. Make sure sure you're looking at those things in most cases as a sell sign for you to go ahead and buy more, because over time the market has been proven to go up. Now, if you guys are looking for different things to invest in, or you're curious about how you can get started in your investing, or if you haven't got started at all before, make sure you like and subscribe to this channel. Make sure that you're watching these videos and making sure you're getting some of the best content, unfiltered and uncensored, for you in terms of how you can grow your wealth over time and get your financial freedom. Now, if you haven't already taken advantage of your financial freedom, definitely subscribe below. There's videos here that I would love to get out over the course of time with this channel, being able to talk about different things in real estate investing, in stock market investing, also budgeting, repairing your credit score, and being able to manage your expenses and live a financially free life. Now, for you guys that are new to this channel, which basically is everybody, this channel is brand new, so this is the first ever video posted on here. I'm going to be posting at least once a week on this channel, and they're going to be about topics involving the real estate investing and stock market investing world. I'm 28 years old, and I've been investing in the stock market and real estate for the last 6 years, and over those last 6 years, I've been able to skyrocket my income over time using certain principles and concepts that I've learned over the course of those 6 years. If you want to learn those concepts as well, make sure you subscribe down below and follow this channel. Thank you guys so much for watching. Once again, if you like this video, make sure you give it a thumbs up. Come back for more videos just like this one, and hopefully I'll see you guys again. Thank you so much for watching.